the South African Reserve Bank celebrates its centenary. The bank opened on this day back in 1921 and issued its first banknotes to the public the following year. The core role of the bank is to protect the value of the country's currency and manage its financial and monetary system. Since the year 2000, when inflation targeting was implemented by then-Governor Naidoo, it's aimed to keep inflation between 3 and 6%. This year marks 20 years since the policy became the anchor, if you like, of monetary policy. The policy itself is credited with delivering a long period of price stability and historic low interest rates. The bank's 100-year anniversary comes amid a surge in digital currencies such as Bitcoin and other cryptocurrencies, and those are certainly gaining momentum. So what should we make of where we are? Let's bring in the Deputy Reserve Bank Governor, Kuben, Naidoo, who joins us now for his reflections on the years gone by and possibly what's ahead. Kuben, great to see you. Thanks very much indeed for making time for us. Let's start with ensuring we're all on the same page. You know, South Africa is reckoning with, if you like, the value of its social, political and economic institutions. For those who are struggling to connect the dots about why it should matter that we have a reserve bank and one that's able to last for 100 years, what would you say they need to keep topmost of mind?
Good morning, Ayanda, and good morning to your viewers. Economies, societies go through ups and downs. They have turbulence, they get hit by shocks, local and domestic. It is the strength of institutions that helps them see through. And the South African Reserve Bank is an institution that all South Africans can be proud of. Throughout the century, it has played a stabilizing role. It has played a role in cushioning shocks. From the Great Depression to South Africa going off the gold standard, to the debt standstill in 1985, to at least 2 banking crises, the global financial crisis, and the COVID crisis. The central bank has played an important role in helping to stabilize the economy, helping to support the economy. And central banks are uniquely placed to do this. That is the value of the institution.
Right. Given that backdrop, what would you say is the current biggest threat to South Africa's fiscal sustainability, and who's best poised to guide us away from that?
The fiscal sustainability is largely the Minister of Finance's job and government's job. The central bank can play a supporting role by enabling the economy to recover from the COVID crisis. The fiscal metrics were not looking good before COVID, but have been severely dealt a severe blow since COVID. The picture is looking better in the last year. The economy is recovering. There is an improvement in revenue. But we're not out of the woods yet. It's absolutely important for government to get its finances underway so that we can have a proper economic recovery. It's a delicate balance between supporting the economic recovery and rebuilding the buffers for the next crisis, which may come in 3, 5, 7, 10 years. And that is the challenge ahead.
Yeah. The Business Day on their front page today speaking about the need to prioritize dealing with debt service costs. Again, for people who aren't in the sector, what does that mean in layman's terms? And is President Cyril Ramaphosa's approach to a problem like that the correct one? Speak to me about the reforms that he's introduced.
Sure. If a household earns 100 Rand a month and they've got a stock of debt, and let's assume they're paying 30 Rand a month in interest costs, it means they've only got 70 Rand for other things. That 70 Rand has to be split between a bit of savings, a bit of consumption, maybe even some investment in things like school education. The lower your debt service costs, the more wiggle room you have. It's quite simple. Now, there's 2 ways in which you can bring your debt service costs down. One is by bringing your debt down, or 2 is by bringing the rate at which you borrow down. And the only way in which you can bring the rate at which you borrow down is if you borrow less, but also if you have low inflation. Low inflation begets lower interest rates. And the only reason why South Africa has the lowest interest rates today in 54 years is at least in part because we have low inflation, and we've been able to keep that down. So that's the key. I think that the reforms that have been announced in the last month or 2 are positive. I think that they would contribute positively to improve business confidence, improved investments, and hopefully improve growth and job creation. But it's a long walk. It's a long way to get back to 3-4% growth.
Yeah. We've also been taught in Economics 101, not all debt is bad debt. that raises the question, what kind of debt does South Africa have, and how do we get that better?
In one sense, it's purely academic to look at how your past debt was accumulated, right? In the main, we have a capital stock, and we've accumulated debt. So let me give you a very good example. We have accumulated about 350 billion rands worth of debt to build Kusile and Medupi. They were supposed to be finished in 2016. It's now 2021, and they don't quite work yet, right? So you have to then evaluate, was it worth raising that debt at that price, given the fact that actually you haven't delivered? It's hugely worthwhile to invest in a school, in a clinic, in a road, in a power station, in infrastructure, in people's education, in people's healthcare. It's hugely beneficial. But I worked at the Treasury, and 10 years ago it cost us about 34 million rand to build a school. Today it costs about 150 million to build a school, and inflation doesn't explain the difference. So it's not just about how you accumulate debt, it's what you do with it and whether you're able to use it wisely and productively.
Yeah, and that's exactly what I was getting at. I mean, on paper, it's always a good thing to be spending money with the hopes of, call it, increasing the quality of life that people have. One hopes that will have a cascading effect in places like the economy. But it's almost impossible to do that without other sectors of government essentially playing ball.
Let me start off by saying that I think that the present government has done a huge amount to try and reduce corruption, to tackle public sector inefficiency, to deal with the policy uncertainties that we are grappling with, be they in mining or in agriculture or in energy generation or in telecoms. I think more needs to be done. But I think we would be amiss if we don't at least pay attention to the fact that there has been significant progress in tackling that. But it takes a year or two to break trust. It takes a year or two to break institutions. It takes a decade to rebuild those institutions. I think that the SARB and the history of the Reserve Bank is testament to that. It's a solid institution, but there have been institutions broken in South Africa in the last 10 years, and it has not yet been rebuilt. It will take a decade.
Yeah. You speak about, I guess, call it the journey that the SARB has traveled over 100 years. I mean, part of the ancient old debates that keep coming up is around the mandate of the Revenue Bank itself. COVID-19 has kind of, again, brought that into the fore, at least in our context here in South Africa. And the broad, call it, spectrum of debates is whether or not the SARB should continue just maintaining price stability or have that expanded to include things like economic growth prospects. How do we see it now, given the year gone by, and how do you envision it unfolding in the next 100 years?
Ayanda, let's complete the sentence. The Constitution says that we have a mandate to achieve price stability in the interest of balanced and sustainable growth. So we're not attempting to achieve price stability for the sake of price stability. We're attempting to achieve price stability because we are of the view that it contributes positively to balanced and sustainable growth. Without growth, we're not going to get employment. Without growth, we're not going to get investment. Without growth, our living standards are not going to improve. That's the bottom line. So the role of the central bank is not merely to achieve price stability. It is to contribute towards growth, development, and employment. But there's a lot of other things, as you've said, that contributes to growth, development, and employment, not just the central bank. I've often described the role of the central bank as the goalkeeper. Right? We're the last line of defense. We're the difference between getting thrashed 5-0 and giving your team a chance. We give the team a chance, but we don't score goals. We're not the guys at the front. We're not the strikers who put the ball in the net on the other side. You need a team effort to do that, and we're only one player in that team.
I love that analogy. I'm going to stay with it. Help us then place where investments fit. Are investments the players? Are investments time out to recuperate the energy of the players? Where would you place investment into an economy in the analogy that you've just painted for us?
The players are our people. The players are the stakeholders. The players are government departments. The players are the banks, the factories, the institutions. They are telecoms companies. Those are the players. Right? We're a player on that team. the objective of that team is to win. And winning essentially means creating jobs. Right? That's the only metric that counts in some ways, creating jobs. And investment is a means to that. We want investment because it helps to create jobs. It builds new businesses, new factories. It generates new ideas. It provides innovation. And that's what that's what investment does. But investment doesn't appear out of thin air. If I've got $1 billion to sink a mine shaft, I've got a choice. I could do it in South Africa or I could do it in Chile. I've got to evaluate what my risks are here. I've got to evaluate what my costs are here, what my future profits are. And I've got a choice to make. So investment is an outcome of that team playing together and pulling in the right direction.
Sure. Obviously, what comes with 100 years is a lot of introspection and reflection. Let's hone in on perhaps one of the historic moments, no doubt also for the SARB, the 2008-2009 financial crisis. Big lessons that came out of that?
Clearly, I think the main lesson was that a financial sector left unchecked will contribute negatively to the economy. And that was not just a South African lesson, that was a global lesson. In the main, South African banks did not blow up during the financial crisis, as banks and insurance companies in many countries did. In the main, South Africa's financial sector remained intact. But the key lesson was financial exuberance, financial excesses. Too much debt, too much borrowing can cause crises. And I think that if there's any lesson from the financial crisis, it's that we need a financial sector. We need banks. We need the ability to lend, to borrow money, to transact. But when there's exuberance there, when there's too much excitement in that sector in some ways, then that's a risk, and that's something that you've got to get worried about. And that's the key lesson for the financial sector for me.
It's on that great note that we'll have to leave it. Thanks very much indeed for joining us for these great reflections. Hopefully, the work done by the SARB is a bit more tangible, even for those outside of the financial sector. Really appreciate your time. Kuben Naidoo is the Deputy Reserve Bank at the South African Reserve Bank. Deputy Reserve Bank Governor, I beg your pardon, at the South African Reserve Bank. Once again, Kuben, thanks very much indeed.